Good morning. How are you?
I'm doing well. I'm nervous now with that look from you.
No. What have you been reading? I have been. Well, I tell you what I've been reading. How about that?
Okay.
What have you been reading?
What have I been reading? Like today or
Yeah,
generally? Well, today I've been reading the news.
Okay, good. That's a good start. That would help for our viewers. I have been reading the Harvard Gazette.
Okay.
Why, Stephen? Why? Because I just wanted to confirm something that I'd read elsewhere, and the Harvard Gazette had the best article on it, which is the 1913 Federal Reserve Act. And I can see... Hang on a second, you lot. Don't go asleep and say, I'll switch over, this is boring. It's important, all right? I'm reading the Harvard Gazette because it's got a great interpretation of the original 1913 Act and the amendments thereafter. So look, just stick with it, because you might learn something about whether Powell can be fired or not, you lot out there. I don't mean you know already. Right, OK, so... This is the Harvard Gazette. The Federal Reserve Act of 1913 allows governors to be removed for cause. That's important, that last bit. But it doesn't say anything about the Fed chair. In your view, does the president, as head of the executive branch, have the power to oust Powell? Right, OK, so there are two separate issues. One is the statutory interpretation issue, whether the addition of the amendment of the Federal Reserve Act, hang on in there, in 1970s, which provided for Senate confirmation of the chair for a 4-year term, incorporates the for cause protection that the original Federal Reserve Act afforded to all members of the Board of Governors, etc., etc., etc. It's really interesting. So it's in the interpretation of the 1970s amendment for cause about whether Trump can fire Powell or not. And this is the crux of the legal argument. So that is important, OK, everybody? So you need to know that bit, because it's for cause or not. And that's the interpretation of whether he can fire him or not.
I think when it comes to whether there is cause, the president has been attacking the Fed chair on two fronts. One, he wants him to cut interest rates. But two, and maybe this is where the cause comes into it, around what he says is a botched job around a $2.5 billion renovation of the Fed headquarters. Yeah. So there's two different streams of critique happening here.
I spoke to somebody about that. And they said, have you seen the building? Someone who is a Washington, D.C. swamp aficionado, someone very high up in Washington, was saying to me, have you seen the building, the work that needed doing on there as well? And actually, a lot of the original plans, including special elevators, beehives, roof terraces, that was all scrapped as well. Yeah. I mean, that's in as much as an account in the FT as well. But the person I spoke to said, look, you know, it's a lot of renovation needed, and a lot of the more ostentatious features weren't carried out actually as well.
They were dialed back.
Again, different interpretations of for cause as well. Let's fill in some details on this story, because the president has denied reports he's planning to fire the Fed chair Jerome Powell, a day after he floated the idea with lawmakers. Speaking in the Oval Office, the president reiterated his criticism of Powell, but said he has no plans to do anything.
I don't rule out anything, but I think it's highly unlikely, unless he has to leave for fraud. I mean, it's possible there's fraud involved with the $2.7 billion renovation. This is a renovation. How do you spend $2.7 billion? And he didn't have proper clearance, et cetera, et cetera. So you know that's going on. So, you know, there could be something to that, but I think he's not doing a good job. He's got a very easy job to do. You know what he has to do? Lower interest rates.
The president's comments came after he told a group of Republican lawmakers on Tuesday night that he would fight. I think one interpretation is he asked them, should he? Anyway, one interpretation is that he told a group of Republican lawmakers on Tuesday night that he would fire the Fed chair, according to a White House official, after asking the group whether they would back the move. Separately, the New York Times has reported that Trump drafted a letter to fire Powell, showing it to lawmakers during the meeting. Look, the dollar dropped sharply on this. Equity markets, I don't know what planet they're on, but they're ignoring all of this. The dollar actually dropped pretty sharply, 1.2% lower, I recall, when I was looking at it, before paring back those losses on the Trump denial. Equities, they did whipsaw a bit, but again, you know, there's no dramatic move to the downside. And there may be a whole host of reasons why there isn't, and we'll get to some of our guests on this one as well. But equities whipsawed amid the uncertainty over Mr. Powell's future. And the news triggered a spike in long-dated US Treasury yields. So you've got the bond market reacting, you've got the foreign exchange market acting on the dollar, but the equity market just glibly doing its own thing. Goldman Sachs chief executive David Solomon gave CNBC his take on the reports surrounding Powell's future.
I think central bank independence, not just here in the United States, but around the world, has served us incredibly well. I think it's important. I think my comments here on Fed independence are with respect to monetary policy. I think regulation and supervision are different. But with respect to monetary policy, I think central bank independence, Fed independence is very important, and it's something we should fight to preserve.
Diamond the day before, Solomon there. I mean, you tell me, ladies and gentlemen, who are the most powerful 5 or 6 men and women in Wall Street? Well, you put those two in there as well. And if Wall Street doesn't want the oscillation that could come from a non-independent chair of the Federal Reserve, now's the time to speak, because now's the time to do it before it happens as well. And it's very interesting that both two of the most powerful 5 or 6 gentlemen on Wall Street coming out very clearly and saying independence has served us well.
I think Jamie Dimon coming out is certainly notable, and also David Solomon. But Jamie Dimon, we know back in April when we had the bond market volatility, it was him who came out warning the president that we were going to see an issue if he didn't rein it in on tariffs, and reports suggest that he actually was a pretty pivotal voice in the president's ear. So I think his words really do matter.
Can I just tie a few other bits in here as well? And I don't want to be critical. I want America to do well. But if you've got the tariffs bringing in vast amounts of revenue and providing great income for the United States, if you've got the one big beautiful bill and the tax cuts for certain parts of the US being such a pivotal part about driving growth as well, if you've got the overall trade and tariff policies driving growth back to America, 101 economics says you don't need rate cuts.
You don't need to cut rates.
And the president is a real estate guy. He knows this better than I will ever know this. And I'm not trying to tell, but the fact is, if all of these policies are pro-growth America, you do not need the extra stimulus of a rate cut.
I think that is spot on if you're looking at this from an economics 101 perspective.
For sure.
But
and it's naive if you're looking at it from a politics point of view.
But if you're looking at it from a politics point of view, what matters to Trump voters? What matters to the average American? Their mortgage certainly matters. Mortgage rates tied directly to Fed rates. And I think that's a critical piece for President Trump moving forward.